Hey everyone, this is John Robinson with Blueprint. Today is November 30th, 2022, and this is the monthly asset allocation update video. In this month's video, we'll talk about the asset allocation changes. We are actually changing allocations for the first time in several months, increasing exposure to equities. But if you haven't already gone back to the written piece that we do, the co-founder's note, I'd highly recommend you do that because this month we talk about compounding. Right? Compounding is the eighth wonder of the world, according to some, and I would agree. And we lead off with a quote from Charlie Munger that talks about, the really important thing about compounding is to never interrupt it. And we go into why having a systematic process, particularly one built around the principles of trend following, allow you to be consistently good versus occasionally great. And I'll talk about that a little bit towards the end of this video. But as we go into December, as I said, we are increasing equity exposure in the US and foreign developed. The intermediate term trend has turned positive in the US for the first time since the spring, actually the early spring. So while we'll remain defensive in Blueprint portfolios, we are no longer fully defensive. We're not at our baseline allocations, we're about right in between. And so we are increasing exposure to US and foreign developed. Foreign developed equities are in a rising trend over the intermediate term time frame. Emerging remains in downtrends over both time frames, so that exposure will not increase. On the real estate side, the exposure is not changing there. Real estate has had a good month in November if you look at it on a composite or an index level, but it has not risen to the level that would change the trend in the intermediate term to positive. So it remains in downtrends, and thus the allocation will not change. US and international treasuries. Well, on the US side, there's no change. We have downtrends across the board, but in the international treasury markets, we now have an intermediate term uptrend. And this is the first uptrend we've had in intermediate term treasuries for several quarters. Now, the exposure will not fully increase because we still have a long-term downtrend. But on the intermediate term, we will increase exposure somewhat in all strategies. TIPS or inflation-protected bonds, we will not experience an increase despite on-the-ground inflation increasing. Financial paper-wise, TIPS have not responded and thus remain in downtrends. Alternatives. So we have an intermediate uptrend in gold. This has been a seemingly tailor-made environment for gold this year, and gold has been in downtrends for most of the year. We now have an intermediate term uptrend, so we will increase exposure some in all of our asset allocation strategies. On the short-term fixed income side, we will decrease exposure, but that's only because we're taking the handoff portion from foreign developed, from international treasuries and from US treasuries, and just pushing that back or handing that back off to those. So we remain overweight to short-term fixed income, but we'll decrease exposure heading into December. So what does this look like on a graph? Well, really the biggest change is going from US treasury bonds in the form of short-term duration and pushing that back to US and foreign developed stocks, as on an index level, they've increased enough to initiate a rising trend over the intermediate term. So what are the big takeaways? Well, US equities are in an intermediate term uptrend. That's the big takeaway. But on the long-term trend side, it remains negative. So Blueprint portfolios will, while remaining defensive, we will increase exposure some as we go into December, but we remain overweight short-term, really ultra short-term fixed income. Okay, so I talked about earlier in the video, and we've written about this. Is it better to be consistently good or occasionally great? And in the context or the frame of long-term compounding, which is the goal, right? That is the goal of investors that have an expected return inside of a financial plan. It's our goal at Blueprint to keep compounding, or the rate of compounding, at or near its highest point at all times. And really we do that in two different ways. The first is we don't our systems are designed to stop the bleeding. We focus on the downside. We remove exposure as trends turn down to preserve compounding by avoiding large losses. Now, the second way that you can impair compounding is by not achieving the growth rate on the upside, right? And trend following allows us to have answers to both of those environments. In this environment, we're increasing exposure because we have a rising trend on the intermediate term in U.S. stocks. Now, we're aware that the fundamental backdrop sentiment doesn't look favorable. But if you look back in history, the fundamentals and the trend are often at odds with each other. So this is a great time for us at Blueprint to maintain our discipline, which we always seek to do, and to follow our rules. So despite the news, despite the noise, we're going to follow our rules, maintain discipline, and in a systematic way, increase somewhat to U.S. equities. So, I just think, we at Blueprint just think that our systems, our systematic approach allows us to be consistently good over the long term, which means we're not a shiny object, which means we're very highly unlikely to hit grand slams. We just want to remain consistently good and transparent so that you can help your clients achieve their goals while at the same time being able to articulate what we do and the story behind it. So we're approaching the last month of the year, which means we're also approaching the beginning of 2023, which a lot of conversations are going to start happening between you and your clients. How can we help you with that? We always say, what can we do for you? And that nothing's off the table, and we mean it. And if you've taken us up on that, that we'll go to great lengths in our service for you or towards you and your clients. So I would just encourage you to reach out to us, whether it's a creative idea or something we've done before. Let us help you with that. So with that, I hope you've enjoyed a great Thanksgiving. We're entering the holiday season where things tend to get crazy. So our hope for you is that you find joy in this period and some peace, and you're able to carve out some time to really look around and be grateful, because we at Blueprint, we're grateful, and we're mostly grateful for you and the great partners that we work with. So thanks for your time. Thanks for watching this video, and we'll look forward to seeing you again as we approach the new year. Thanks.